Morning everybody, it's Chris here from Serene Education with the 4 major analysis update for the 5th of July 2011. Going to be going over our CTC strategy this morning. Going to be looking at the 4 majors in particular. Just coming and looking at the euro at the moment. And I was doing a webinar last night and speaking to a number of people on our course, and I mentioned that we had this indecision candle yesterday, and if it closed the same then we would either see a pullback or we need to see a bullish engulfing to see further movement to the upside. This is coming on potentially a resistance level. If you took the bodies, which I tend to do, or you do the wicks, you'd find that this is the case here. Sorry, apologize, it won't be to the last. You can see the price is in that area. Yesterday it closed higher, if you want to look at it that way, but we've seen price pull back significantly during the Asian market trading going into this morning's European session, and leading up to the UK start, price is still falling to the downside, where if this is to continue, then we're obviously seeing is an evening star pattern of some sort forming after an uptrend, and we could look at potentially the previous support resistance area roughly around the 1440 mark being our next target, the 20 period moving average. CTC is still extended blue across the board on this time frame. Intraday is showing a different time frame altogether. You can see on a 4 hour, for example, that consolidation range I mentioned last night. Indecisive. Sideways motion followed by a potential upkick. We were waiting for a potential support level to be found. That broke through, however, and we've seen it pull back right through. This candle here, so the last 4 hour candle has really engulfed pretty much all of the prior range. So if I just took that into consideration and just drew that, you can see that it's taken out all this. So quite a significant candle. However, it needs to progress lower, and it needs to close ideally it needs to close below this range over here. So as long as it can do that, then obviously you can see the lower swings going into the pattern. The interesting scenario starts now where you have CTC being well extended blue across most of this uptrend. However, recently we've seen price really starting to fade out. I mentioned in yesterday's video blog that price, the highs were getting lower and lower. Not showing a lot of conviction in that move. Sure enough, the floor, the support levels were also waning, it's going sideways. You can see momentum is shifting now, and over the course of yesterday we saw a lower high being formed here, and then we had the breakout, and then it's now falling lower. It's trading below the 2 moving average crossovers. You can see the CTC has gone red on this hourly time frame, which means that the 30-minute should also be showing you the same. There we go. Trading below the institutional moving average as well as the 2 other major moving averages. If we fail to see price pulling back and closing higher, this is where it starts getting interesting. As I mentioned, we want to see price closing below that range, that consolidation range, primarily because a lot of whipsawing you can see here over a long period of time at the 144600 mark. We've seen support in the past, and price is at that level as we speak. So ideally we still want to be trading lower than that. Trading lower than that would obviously see further opportunities to the downside, primarily because we've broken through all the moving averages. Our CTC is in our favor, and all importantly, it'll be trading below this consolidation range, this very long period of indecisiveness from the 1st of July, or you can go far back as the 30th, where it's been trading higher. Don't get me wrong, you'll still be making pips, but not as much as you would if you had actually got into the initial trade a couple of weeks back. And you can see that now price is not forming any new highs, and it's forming lower ones, which dictates that the intermediate trend is now to the downside, and it's broken below this area here, but it's finally supported 144600. Got to trade and close lower than 14,4600. Until it's done so, CTC will be well extended red, and we should see further scope for further downside movement and a lot clearer picture of downside movement. And I'll just mark those off so you can see them clearly. A lot of indecision here, but we've got a clearer indication of price moving further, and then our all-time low down here just below the 1410.11 mark. Next up is the US dollar. Sterling against the US dollar, and we're having a look at the daily time frame here. There again, last night, with the same as its euro counterpart, the pair closed off very indecisive, this in a negative trend, and sure enough, what we're seeing is psychologically people seeing this intermediate trend in place, and we've seen some selling due to that. When price gets quite close to these intermediate trends or trend lines or resistance levels, you'll notice that area there, and we saw a breakdown and a further breakdown. These all happen psychologically. These all take place at a prior support resistance level. You'll notice that we had a support level running through here on a daily. You can notice that for over a number of months we had a support chart in mid-May, then mid-June. Then it failed to hit stack up once we had the squeeze pattern breakout, and now what we're seeing is a breakout pullback continuation occurring on cable. This is exactly a breakout pullback continuation, and it's happening in the direction of the trend as it speaks now, because the CTC is in our favor to the downside. This is what's happened. The currency pair sterling has been very bearish recently, and what it's done is it's seen it break its major trend for the first time since the last time it did that, which was way back in May of last year. You can see that breakout, pullback, and continue to the downside. Here again, it's pulled back now because of this breakout. It's pulled back to the underside of a prior support area, which happened to be now a new resistance. Fell to break above the 20-period moving average. Fell to trade higher than that, and subsequently fell lower. It's now in tune with its playing with the institutional moving average. On a daily, if it's trading below that, then we're definitely going to see further extensions lower. We have to see a nice bullish and bearish engulfing, apologies, to see further downside movement. So let's see what happens today. If that's the case, then we could definitely see the prior swing, or the low in this case, being our first target. So here, just off the 1590, the 15,900 mark. Be aware the price is rallying next to the, or near the 1600 mark, which is a all-time long-term support and resistance level. If I just put that in so you can see it, and then back out, you can see how for a long period of time we had resistance, a lot of support through there, further resistance and further support over a number of months. So we are at a level where we've had prior support on a huge level. Are we going to see the same thing happen here again? Yeah, fair enough, it's broken through all these, but this is a consolidation range area, primarily because 1600 psychologically is a long-term support area. So you'll notice that price broke through it not so long ago. But that having said so, failed to materialize. We saw a pullback to the underside. It didn't fail to trade any higher than the underside. So we expected further downside movement. That didn't occur, and we saw price revert to the upside and pull right back to a prior support area at the underside. And now we're seeing a bearish candle. What we want to see is this candle here, or the next candle, closing much lower than the 1600, showing you conviction that there's further downside movement, and we are not capped by this intermediate trend to the downside, or the new trend negative down to the downside. And then looking back, we should be able to see further extensions lower. But until such time, we could see a potential bounce at 1600. So intraday, even though we've had this move, we've got to be potentially aware, or we have to be aware, that 1600 is still governing this trade. Why? Because it is still a major long-term support area, and we are trading within a spitting distance of it. We've had some breakouts. Look here on an hourly, yes, don't get me wrong, it's been happening, but it hasn't continued to the downside. It's kind of consolidated in this range, and you wouldn't have had much movement to the downside because of that. So Ideally we want to be trading below that. That's the reason why I talk on a daily. We need to see a nice bearish engulfing. Give one full candle away to the market. I know in terms of you're looking for pip movement, it's a lot to give away. However, what it will do is it will dictate price movement thereafter for a number of weeks or months. We are trading in a negative trend up to this point. And on a daily, however, if you look at the bigger picture, we're still in a consolidation range. This is very messy the past couple of months. This year has been really messy. We haven't seen price really dictating as much, and recently we've seen some huge moves to the downside over the past weeks. But we need to get through this consolidation range. We need to get through all this noise and such. Once we traded through that, then we can look at the bigger picture, and there's less noise happening down the bottom. And ideally, if we break through the 5900 barrier, we could be looking at potentially 3500 as a potential target. And there's not so much noise as it is up here. Notice, we're moving, but we're not moving as noisy as the top end. So very important. Here's a 30-minute chart. Just bring it up for you. Put my 1600 as my long-term support and resistance area. Notice the price has moved to the downside. Notice we have come off higher highs. We're seeing price swing lower, so you can draw those trend lines in just to confirm those. And notice we're getting a bit of consolidation as we head towards the 1600 mark. Psychologically, people are going to be looking at it as a long-term support area, as I mentioned. So psychologically, we're going to see a bit of hesitation prior to that. Notice here, a lot of hesitation before, and then we saw a bounce. Same here. Moved lower, hesitation just prior to price, and then we saw a bounce off. Further back, huge move down, hesitation, then a further move, but not very convincing. And we saw a bounce back to the upside. Same to the upside. Price moving to the upside, hit the 1600, further failure, then failed, pulled back, and then consolidated for a while, and then we had the upside. So 1600, definitely going to see something happening around here consolidation wise. It needs something really bearish in order to take it through. Something like that, a massive candle like that to drive it down lower. That will just tell you that the good money, the money we want to be trading, is definitely now in our trading in our direction. It's trading with conviction, and once that's occurred, then what you'll see is the snowball effect occur, whereby you get this huge influx or massive push. And then what happens is everybody else gets on the actual bandwagon as such, and that snowball starts, and it'll just take it a lot further to the downside. Next up is the US dollar against Swiss franc. Let's have a look and see what's happening. Last night I mentioned on our webinar that we were back to retesting a prior support and resistance area, this breakout area after we've seen the US dollar trading in a negative trend for as many weeks. But we also had an area where we're having the major trend also in play. So we have not only a prior resistance support area above us, but we've also got this major trend line to deal with. So we have we're fighting two areas of resistance. One at the resistance that we had on a price of support and resistance area here at 855.50, plus the major trend line is also in play. And we also have the 50. So, and the CTC is also governing price trend. So, indecisive. What's likely to occur? Well, we've got the CTC. We have the blue arrow and we have a blue bar, but the CTC on the other side, the bands are still negative until such time as that's occurred. These turn to blue, then obviously we're not interested in the trade, and that's only going to occur once we've seen a nice break to the upside and we are trading at the high end of the bandwidth here, and the CTC will go blue across the board. Until such time as that's not occurred, then we're looking at the consolidation pattern, and that consolidation is occurring are likely to occur because we're now at a very strong price support and resistance level at 855 plus the major downtrend. So price needs to do something drastically in order to break either. Personally, the one to the upside. There's a lot more momentum that's needed to break higher. There's a lot more bullish news, even if we have been in a negative downtrend for so long. The US dollar has to come up with something really significant in order to push it higher, to actually trade higher than the Swiss franc. Otherwise, what we're going to do is we're just going to see it move sideways, consolidate, and then break to the downside. Why? Because not only we've got these two resistance levels here above us, but we've also failed to materialize in the past at this level. So here, look for bearishness to occur personally intraday. We're going sideways, and that's going to show on our charts. Our hourly and 30-minute, you can see here, just moving sideways, not much movement. Rather, it'd be far better just to leave this, rather than not trade this area here. I call it the Bermuda rectangle of trading. This is the no-fly zone. Call it what you may, but this is the underside. Just imagine on the daily we have this major resistance level coming up. See, it's 853, 855 is not too far off, and we're consolidating just before we hit that range, as well as a major trend line to the downside, and we're consolidating. So it needs a lot of oomph, a lot of momentum to punch through, something like that, and then we need to see a consolidation and a support level found above the 855 range. However, we're still in this consolidation range, and it's going to have to do a hell of a lot in order to actually convince a lot of people that we're going to see further extensions higher because of that move. But once it happens, I'm not saying it's not going to happen, but if it does happen, we need to see a lot of conviction in that move. Something like that, for example, and then for price to sit above that area at the 855 mark. And if that occurs, if you look at the hourly candle for the hourly chart, you can see that range, a lot of wicks. So there again, I'll just put in, once that occurs and we get a punch higher, we've just got to be aware that that prior resistance level is thereabouts. You can still make pips to that, but need a nice boom, massive up candle like that. Then see if it takes us, closes higher, and then we're going to be trading that to the upside. Until such time as it's done that, then I'm just going to bide my time and wait for a conviction, a definite conviction from the market as to what it is likely to do next. Last pair of the day is US dollar against Japanese yen. We've seen a lot of movement for this pair on to the upside, and you can see that's coming on this intermediate swing high after the support level at the 80 mark been tested recently. This pair, you can see if it moves way out, has been a consolidation range to the downside, and it's been posting lower highs though as we've gone to this, and you can see it's been squeezed now between the 80 and the 8200 mark. You have the institutional moving average moving through on the upside of this. This is the intervention area here, which didn't stack up, and we saw price revert to the downside not so long ago in April. But we've seen price reverting to this sideways motion, not really moving anywhere significantly very quickly, just pretty much going sideways and consolidating even tighter as we move in this consolidation pattern. This morning we've seen a lot of movement to the upside. Words around that, a lot of long-term traders have started to take profit off the table, and we've seen the US dollar gain strength against its counterparts. Here you can see price is trading at a previous swing high point, and we just extend that. You can see that you're trading at the higher end of this range. So ideally, you can see if price continues this way and closes higher, then we're significantly seeing a break above a smaller term resistance level, and then we could definitely see the next possible target, the prior swing here at 8150 being our next target, which will bring us back to the this intermediate trend line just prior to the institutional moving average. CDC is still negative, primarily because this consolidation range is going sideways, and we're still in a very negative downtrend. It's a very, very strong support level. If you look at this on a weekly or monthly basis, you can see that this consolidation range is quite a strong one, a significant one, and hence the reason why 80 is so important for this pair. If it breaks and closes lower, we saw that intervention here for the Japanese and the G7 countries got involved because US dollar was trading at an all-time low against the yen. That's obviously got its repercussions for both parties, both countries, because there's such close ties or allies. Here, squeezing to the upside, higher swings, swing high, swing high, swing high, and trading slightly higher. And the CTC has now done two of its important things. It's got its the blue arrow and blue candles. However, the CTC still needs to go blue on either side. We haven't seen that occur since April, and that was the intervention, which didn't really stack up. So we need to be trading well above the 200 period moving average here, around the 8200 mark to see that occurring again. So there's a lot of momentum that the US dollar has to do in order to get up there. And you're thinking, as things stand at the moment now in the US, trading, they've overspent. They've reached their loan rate. I think it's $14 trillion. So things aren't looking rosy that side on the other side of the lake. So yeah, I mean, most of this happened this morning. I think potentially because long-term traders were taking small profits off the table, and we saw the US dollar rise because of that. Intraday, you're seeing the Japanese yen is one of the ones where you can see a lot of whipsawing on our smaller time frames that I mentioned last night. I mean, you zoom out on a 30-minute chart. I mean, oof, it looks very, very messy. And primarily, personally, it's far better to trade the higher time frames on this. There's been one or two opportunities to the upside and to the downside on this pair as it's made its way in this consolidation range. But as it stands now, we would like to definitely see a confirmation close higher than the previous high here that we saw, or swing. So if you look at the open here, this candle here, so anything above 81,100 would be fine for this pair. So look at the end of close today, trading wise, to see if that's the case. But the CTC on our smaller time frames is showing us positive to the upside. Notice our 5 minutes, our 50 minutes higher, break higher than the Asian market trading session high at this range at 81.90, bar this fake out, but you can see that it's now broken above this range and is trading higher. So very whipsawy for the Japanese yen, but as long as it's trading in the upside, then obviously what we could do is you could see price continue to the upside for this pair, as we know that the 80 is a strong support area, but we're getting higher swings. And it's trading above the institution moving average on our 4-hour, which is a good sign. We should see further progression to the upside due to that. It's got to close higher than this. If the 4-hour can close higher than this price swing, here at the 81,100 or 81.1, then we could see a definite continuation to the upside. Otherwise, we could see prices reverting to the downside if that's not the case. That's it for today, guys. Hope you have a fantastic trading day. Hope you make yourselves aware that there's a lot of news still to present itself this week. So we're going to see a lot of price movement if that occurs. Friday is our non-farm payroll. So I think we're going to be going towards that. We're going to see a lot of consolidation possibly before the news presents itself. But we've seen movements overnight on this pair, and it might reflect. It might be a direct indication of what's likely to continue for the remainder of the week. The Euro and sterling in particular, we got to see some definite breaks. Euro, it's exactly the same. We've seen a consolidation range and we've seen break lower, but we have seen some profit taking overnight. It's quite significant profit taking, but that's from the big boys as they're starting to scalp out of their positions long term, and that's being shown on the charts this morning. Make sure if you're using the CTC strategy to please follow the rules. Very important. Ensure that you have the correct money management to back it up. And most importantly, keep your trading simple. Once you have all those working in your favor, you're going to find that you're going to be more profitable as a trader. So without further ado, have a fantastic day on the markets. And most importantly, trade serenely.